Welcome to this explainer. Today, we're cutting straight to the absolute core of trading success. We're skipping the usual financial jargon and zeroing in on the inner game, the psychology of trading. It's kind of funny because so many folks look at the stock market or crypto and think it's literally just a numbers game. But, as we're going to explore today, those numbers, yeah, they're only half the story. Before we even think about opening a chart or crunching a single number, we really need to ask ourselves a crucial question. What actually causes us to stumble when the markets go absolutely crazy and test our limits? If you've ever watched a ticker flash bright red and felt your stomach just drop to the floor, you know exactly what I mean. The reality is, it isn't a lack of information that trips us up. It's what happens inside our own heads when that information totally contradicts what we desperately want to happen.
Section 1. The Pillars of Training.
Every robust strategy relies on three outer game pillars. First up, technical analysis. That's your ability to read the charts, understand price action, and spot trends. Next is fundamental analysis, looking at underlying value, news, and the broader economic environment. And third is risk management, which is the absolute must-have mathematical discipline of protecting your downside so one bad move doesn't blow up your entire account. Most traders spend years and honestly thousands of dollars on crazy expensive charting software, just perfecting these three areas. They memorize every pattern, read every single earnings report, and calculate position sizes down to the penny. But the harsh truth? These three pillars alone are not a silver bullet. They just won't guarantee success on their own.
Section 2. Mastering Trading Psychology.
You can have the absolute best technical and fundamental analysis on the planet. You can have your risk management formulas perfectly dialed into a beautifully color-coded spreadsheet. But what actually dictates your ultimate success or failure when real, hard-earned money is on the line? When the market suddenly turns violently against your perfectly researched position, that spreadsheet is definitely not going to save you from a panic attack. And your beautiful charts, they literally cannot stop your trembling finger from clicking sell at the exact worst possible moment. Trading psychology isn't just some self-help buzzword. It sits right at the exact same level of importance as your charts and risk management. It's the ultimate capstone. Think about it like this. Technical and fundamental analysis give you the what and the when. Risk management gives you the how much, but trading psychology, that gives you the actual capability to execute the plan. Without the emotional control required to stick to your strategy, the strategy itself basically doesn't matter. It's the essential glue holding those three outer pillars together.
Section 3. Calm in difficult situations.
There's a core conflict we all face. On one hand, we have the external environment, the difficult situations. These are the unexpected news events, the sudden crazy volatility, the trades that immediately tank into the red. We absolutely cannot control these events. But on the other hand, we have an internal necessity, the mandate to stay calm. This duality is literally everything. The market's entire job is to create difficult situations. Your job, your only job in that highly stressful moment, is to maintain your emotional equilibrium. If you match external chaos with internal chaos, you lose. You have to be the calm center in the middle of the market storm.
Section 4. Waiting for market opportunities.
The ultimate stark solution to surviving these chaotic situations comes down to two simple words that are maddeningly hard to actually do. Just wait. Seriously, when your position drops and that massive red candle plummets on your screen, the urge to jump in and fix it is so incredibly overpowering. We want to revenge trade our way out of a hole. We convince ourselves that if we just click fast enough, we can outsmart the algorithm. But the highest expression of trading psychology is having the sheer discipline to override your biological impulses and just do nothing. The crucial point here is that by having the patience to literally sit on your hands, you're actively preserving two vital things, your financial capital and your mental clarity. You're keeping both of those resources safely tucked away for a true market opportunity, rather than forcing a terrible impulsive trade just because you're bored, scared, or frustrated. A real opportunity is one that perfectly aligns with your technical, fundamental, and risk management pillars. By having the patience to just wait, you guarantee that when that high probability setup finally shows up, you actually have the clear head and the available funds to execute it flawlessly.
Section 5. Patience in modern markets.
This psychological framework is absolutely vital in the most volatile, lightning-fast arenas out there today. Think about cryptocurrency trading, where assets can wildly swing double-digit percentages in a matter of minutes while you're just grabbing a coffee. Or futures trading, where leverage can amplify your losses just as incredibly quickly as your gains. And then there's harmonic advanced trading, which requires meticulous attention to really complex geometric price patterns playing out over time. In all of these arenas, the market moves so fast that it actively tries to trick you into impulsive action. If you don't have patience totally locked down as your foundational skill in these environments, the volatility will simply chew you up and spit you out. You have to let the patterns form. You have to let the volatility settle. You literally have to wait. To wrap up this explainer, I want to leave you with one final, vital thought. We've seen that technicals and fundamentals are virtually useless without the emotional discipline to actually execute them. We've seen that the ultimate weapon against market chaos is the patience to just wait. So I challenge you to take a hard look at your own decision-making process. Until you master the patience to sit on your hands and wait for the absolute right opportunity, who is really in control of your portfolio? Are you the one executing a calculated edge, or are your impulses, your fears, and your lack of patience making the trades for you?